the California Dream for All program is officially out of money. Now, the official word from CalHFA is it is on pause. Now, why did they say it's on pause? Well, there's a couple of reasons why. The most simple one is because the money is expected to be replenished. I've been telling you all along, there's two ways the money comes back in. It comes back in from money that the state budget sets aside, which they had set aside $500 million. And then back in January, they dropped that to $300 million. And we just blew through $300 million of loans. Now, that's not $300 million of properties. This is $6 billion of properties. If everybody took 20%, $300 million is 20% of $6 billion, I think. Maybe my math is wrong. Anyway, it's a huge, actually, it's five times the number. So 1.5 billion. So 300 million money is 1.5 billion of purchase prices. If everybody took 20%, we just locked $1.5 billion of purchase transactions in the last 8.5 business days. Last week, this launched last week on Monday. CalHFA was only open for 4 days because we were closed on the Cesar Chavez holiday. Monday of this week, I double checked with my corporate office. Maybe it was Tuesday morning. I don't know. I was on vacation. Honestly, it was Saturday every day this week for me. But Monday or Tuesday of this week, I contacted my corporate office and I asked them to reach out to CalHFA to see if they could tell us how much money has been used so far. We were told almost immediately, they emailed back and said, we don't publish that anywhere, but we have currently reserved $49 million of the $300 million. Well, what that's saying is between whatever day that was, I think it was Monday, and yesterday, Thursday the 6th, that CalHFA had another $250 million of loans of just the second mortgage, $250 million of the 20% second that were reserved. And they were saying that based on what the locks looked like yesterday, they announced it yesterday on Thursday afternoon after they had closed, so they couldn't reserve any more locks. They said, hey, based on our projection, we're probably going to run out of money on Monday. So how in the world are we sitting here? I'm recording this at 2:30 in the afternoon. At about 11:30 today, they ran out of money. How in the world, when they open up at 8 o'clock in the morning, can they run out of money in, 3.5 hours from when they opened to when they completely ran out of money? How did that happen when they projected to have enough money through next week on Monday-ish? And they put the official sunset date or pause date as being Wednesday of next week. Created a whole bunch of confusion for a lot of people. So first of all, how did it happen? There's a bunch of people who had rate locks that they were waiting on. And they weren't really in that much of a rush. Maybe they had a 45-day escrow. They were waiting a week or two to lock the loan. Once they got that notification, they jumped in and tried to lock it immediately this morning. I put in one of my locks right at 8 o'clock and it got processed by 8:30. Normally it's about a 20-30 minute process. I put in my second lock at 8:15. It got processed at 11:25, which in my view is one of the last rate locks that was done. So within the first 15 minutes of the day was when those rate locks were submitted that actually ended up getting locked in. And there was a whole bunch of buyers in contract that didn't get the money because we were thinking the money was going to last until Monday. So everybody jumped in today to say, I don't want to wait and risk the chance that it's going to run out of money by next week. So I'm going to jump in right now and I'm going to lock that money. And here's what I'm worried about. I'm worried that a lot of people locked in money on contracts that are not fully negotiated or on properties they aren't fully committed to buying. Maybe they were thinking about it. They had a home inspection coming. They were super worried about something about the property, but the loan officer said, look, the money's about to run out. We need to reserve the money now. The worst case scenario, we cancel it. So when I said that there's really two ways for the money to come back, and I only explained one of them so far, which is that the state allocates money and they're expected to allocate another $1 billion every year. I'm not too convinced they're going to do that. I'll explain in a minute when I think that's going to happen. But the second way that money comes in is that the CalHFA can borrow money. They can get a loan to replenish that money and the state just pays the interest on it. But here's the third way that I haven't really been talking about much, and that is that the state is going to have cancellations. We're going to have people that reserve. I guarantee you there are people in my industry that reserved locks this morning so that so that their client could hopefully take advantage of this, even though the offer had not yet been accepted. And so we're going to have situations where clients are going to cancel their locks, or the loan was never really a loan in the first place. The question is, what's CalHFA going to do with that money? What are they going to do when they end up with another $20 million of money that's available in a week or two when those locks cancel? Are they going to open that up again? I don't know. And if they do, how quick is it going to disappear? Because we literally had what was projected on average 2 more days worth of funds that went away in 2.5 hours. And a bunch of people who had contracts accepted, or maybe had contracts accepted, being a bit skeptical here, but I think some were locked without having that accepted contract. And those people will jump in and try and get the money as well. So is the next time that this money is available, is it going to last longer? I don't think so. Because I think part of the problem is a lot of this money was eaten up by people who were already in escrow, putting 20% down and said, man, I can put 40% down. There's nothing wrong with that. I don't blame those people. I think CalHFA messed up how they structured the program. I think if you're really trying to help people, you start by saying, look, you can't put a whole bunch of your own money in on top of this money because you didn't need the help in the first place. Now, I helped a lot of my clients do that didn't need the help, but it was a program that they could take advantage of. And I'm not embarrassed. I'm not ashamed. I'm not anything. The rules were set up the way they were. And it's not my job to police the rules. It's my job to help my clients get the best deal they possibly can. And if you have a loan officer that isn't trying to get you the best deal they possibly can, then you have the wrong loan officer. Because every single client deserves my best attention and my best advice. And that includes, hey, if you're already in escrow and you like the idea of the shared appreciation program, you can have a cheaper monthly payment, set that money aside and invest it or do something else with it. There's a lot of people who took advantage of this program that were already in escrow. Now you've got a bunch of people who just got into escrow in the last 24, 48 hours that didn't have access to the money because the money just ran out. So what's that going to mean? Well, first of all, the winners are the people who got in and got the money and got it reserved. There's way more losers in this, unfortunately, than there are winners. There are people that never even got their pre-approval completed. People who were working on improving their credit because they expected to be able to get some things paid off and be able to get qualified in the next month so that they could buy something before this money ran out. It's pretty sad that this money went so quickly, and it's pretty disheartening. And so there's going to be there already are, I'm sure, a lot of upset people right now because they missed out on what they think was their opportunity for homeownership. Well, here's the deal. I think there's still huge opportunity here. And the reason why I think there's huge opportunity is because we just got proof of what I've been saying for the last year, which is the demand for homes is still there. The buyers still want to buy homes. So it's not about a lack of demand. It's a lack of willingness for the buyer to pay these interest rates that are out there today and the payment that goes along with these interest rates today. How do I know that? How did this prove that? Because we just got a 20% discount off of the monthly payment, which didn't come for free because you also had to pay the state back 20% of how much your house price went up. And we had a flood of buyers that ate up this money significantly faster than anybody thought was possible. Why? Because everybody is sitting on the sidelines waiting for a deal. I've had so many clients who have said to me, John, I want to wait for the housing market to crash. And I've used the example of saying, look, if the housing market crashes, let's pretend you're right. Let's pretend that house prices drop and immediately prices go down. That's exactly like what would happen if a gas station accidentally listed gas for $1 a gallon. We've seen it on the news. We've heard these stories. Let's pretend in your town that a gas station accidentally put gas at the price of $1 a gallon. Well, first of all, everybody and their sister would drive to that gas station and the line would be a mile long. The irony is, think of how much gas people are waiting in line to get gas for $1 a gallon. That's quite ironic. But anyway, what happens to the gas? Well, first of all, the line is super, super long. So what are the chances that when you hear about it, you're going to make it there in time to get gas before one of two things happens? Either the tank underground runs out of gas because everybody's pumping as much as they possibly can, Or the gas station owner realizes what's going on and that he's accidentally selling gas for too cheap and he raises the price back up to where it belongs. Either way, only the few people who got lucky and were close enough to that gas station when they heard about it got the opportunity to get gas at that low price. Because everybody wants cheap gas and everybody wants a deal on a home. And this program was specifically only for first-time home buyers. So it isn't a matter of people who own a home that want to buy more. This program proves that there was a flock of people jumping in, that we had, what did I just say? $1.5 billion of transactions that went into escrow in the last couple of weeks, specifically because of this program. There's a bunch of people. I have a bunch of clients who are in the process of getting pre-approved or in the process of shopping for homes that can't use this program any longer. And yet, the fact is, it's just like the gas. Everybody wants to get something for cheaper. Now, how much cheaper were they really getting it? Let's do the math. If we're at an interest rate of 6.25% and you are making payments based on 80% of the purchase price, that's essentially the same payment as if rates were at 4.25%. Now, there's a lot of conversation that says we're going to see rates back in the 4s in the next year or two. And so the question is this: do you wait until this program comes back? But if you do, what's going to happen to house prices in the meantime? Because what's going to happen, in my opinion, is as soon as this program comes back, let's pretend they fund it with the $1 billion they had planned to fund it with. That means we're able to help more than 3 times the number of families. Well, at this rate, that means it'll last for 6 weeks instead of 2, but we're still going to see upward pressure on home prices. Because at any point that home prices drop just a little bit, you've got a flock of buyers coming in to buy them, just like when we had the price of your monthly payment drop. Because of this program, you have a flock of buyers coming in to buy those homes. And so you're not going to see a drop in house prices, and you're not going to see house prices stay the same when interest rates end up going down. When interest rates drop to the 4s, all of the buyers right now that were waiting and saying, well, I'm not willing to make the payment on a $500,000 home, but I'll make the payment on 80% of a $500,000 home. Guess what? They're going to have exactly the same payments for that $500,000 home when the rates drop into the low 4s. And they're going to come back and want to buy again. And guess what happens to house prices? They go up. And why? Because we don't have enough supply of homes. This is not an issue of loan guidelines. It's an issue of not enough homes have been built. And I've explained it many times. I've got a long video I did back in January about where I think the economy is going in 2023. It's about 45 minutes long, and it's really my economic outlook and market outlook for 2023. And I talked about all of these things about the supply issue that we have with homes. We're not solving that problem. Builders are not building enough homes right now. Why? Because they don't have enough demand from buyers. Because buyers don't want to pay a 6.25% interest rate or a 7% interest rate like we saw in February, and we might see later this month. So what's the moral of this entire story? The moral of the entire story is, look, if you got in on the Dream for All, you're in great shape. And I'm going to explain to you in a minute what that means for you that got into Dream for All and how the home buyer education is going to play into that. But if you got into Dream for All already, you are in great shape. Congratulations. If you didn't get into Dream for All, you really need to take a hard look and say, should I buy a home anyway? Because you're going to buy now at a lower price. And then when Dream for All comes back out again, or when interest rates drop down into the 4s, the prices will go up and you'll be able to refinance to get a lower interest rate. And you had a lower purchase price. And you don't have to share any of your appreciation of your home price with the state of California. Now, I'm not saying that was a bad thing, but it's a trade-off. And so when you lose one trade-off, you get the benefit. And in this case, the benefit is you still have an opportunity to buy a home now before prices go up further, and you can refinance when interest rates come down. All right, so now I want to talk to you all about home buyer education and the mess that happened with that, and what's the next mess that we're going to see for the people who did get their money reserved for the Dream for All. So first of all, home buyer education, I've heard rumors now that they're out to the middle of June for appointments. Okay, well, that's a major problem because what we had is everybody jumping in and saying, you know what, I need to get my education because I got to make sure I get a hold of this program. And a lot of lenders told their clients, you shouldn't write an offer until you get your education done. I never said that to any of my clients. I'm not claiming to be smarter or better than anybody else, but people called me and said, John, my client shouldn't write an offer because they don't have their education. And I said, look, if they don't write an offer, the money's going to run out. So we have to have faith that something's going to happen and this is going to end up working out. Well, what happened is we ran out of money, and all the people who have scheduled counseling appointments over the next 60 days that didn't get their offers accepted, they're going to cancel the appointment. Why in the world do you want to get counseling for a program that you're not going to take advantage of? So there's going to be a huge cancellation rate of appointments. And on top of that, CalHFA announced yesterday, when they said the money is running out, that they said, hey, by the way, the homeownership counseling, we're going to prioritize the dates based on close of escrow. So anybody who's in escrow right now that's worried about, oh my gosh, what's going to happen with my counseling because my date's not until after my close of escrow date, CalHFA is addressing that. And I think the problem is going to go away anyway, because we have a significantly high rate of people who signed up for counseling that weren't in contract, and they're just going to cancel their counseling appointment. And I agree with it. There's no point in them doing the counseling. All right. Now, the next problem for the people that were the winners that got their offer accepted and reserved the money with Dream for All, we're going to have to squeeze all of these 2,500 families and all of their transactions that were locked in the last 9 days through a system that processes 20 loans a day. They've had about, they're 2 days backlogged right now, and they've had between 20 and 30 loans in their queue each day. So they couldn't even get through 20 to 30 loans in a 2 day time frame, or basically that's about what they were getting through. So if they've got 2,000 loans that have to go through this system and they're doing maybe 20 to 30 a day, we've got a major problem, because that's 100 business days, 100 business days that it's going to take for them to get through 2,500 loans. And we had a huge amount of loans that were locked in the last 3 days that are going to hit CalHFA in the next 15 days. I think we're going to have some major close of escrow issues. I think we're going to have some major problems with timing of files getting through CalHFA, let alone getting through the lenders. You've got hundreds of lenders out there that are doing these loans. They're underwriting a loan, they're doing the appraisal themselves, so CalHFA doesn't get involved in that. CalHFA gets involved once you have all of that done. You have the appraisal in hand, you've got the loan approval in hand, and then you have the counseling in hand, and then you submit the file to CalHFA for their final authority and for them to give us the loan documents. That's where we're going to run into the next problem. That's where we're going to have major issues over the next 30 to 45 days, because remember, a lock for a CalHFA loan is only, well, it's a 60-day lock for the lender to deliver to CalHFA. Now, most lenders need about a 20 to 30-day window to do what's called post-close, or process the loan and get it sold, especially if CalHFA has any questions about it. They have time to get it done. Otherwise, we pay a penalty if we don't sell it to them by the 60th day. So we tell the consumer, you've got a 30-day lock. And that gives you 30 days to close, and then us 30 days to get it sold to CalHFA. And if you don't close within that 30 days, the penalty CalHFA charges us on the 60th day, we're going to charge to the buyer on the 30th day. That's how most lenders handle it. Now, the good news is CalHFA allows multiple extensions, but they're 1/4 point a piece typically. So you're talking about 0.5% of your loan amount for a 30-day extension. And that's on your first mortgage, not on the second. You're not paying anything on the second. So if you bought a $500,000 home and you got $100,000 for your second, and your first mortgage is $400,000, you're talking about $1,000 every 2 weeks in extension fees. And this extension, I think, is going to be the next shoe to drop. It's going to be the next challenge that we're going to run into. So guys, I know I've ranted for a while. Hopefully you enjoy this format, and for me to give a lot more in-depth information once a week. Here's the deal. This is a blessing, but it's going to turn into a nightmare. So the California Dream for All has become the nightmare for many. Even those that got accepted on the Dream are going to have to deal with a nightmare of timing. Those who didn't get accepted have to deal with the nightmare of disappointment. And should I buy anyway, even though I'm not getting access to these funds? And even if the money does come back, how quickly is it going to go away at that point in time? Is this program needing to be revised? Does CalHFA need to rethink how much money they're providing per person, or rethink the income limits of who they're going to allow? I don't know. But I do think that it's a broken process and it's a broken program if literally you run out of money in 9 business days. Gang, thanks so much for listening to me. I hope you have a wonderful Easter weekend, and we'll talk to y'all soon. Bye-bye.